they record the screen, I can incorporate.
They're going to send us a Zoom recording of the whole thing.
Oh, perfect. Okay, great. Yes.
All right, we are now live. So hello and welcome to those of you joining us just a few minutes early. My name is Charlotte. I'll be your Money Show host for this session. I do have Peter and Dan here with me in the Zoom room. They're ready to begin their discussion on time at 11:20 a.m. That is Eastern time, coming up in just a few short minutes. Thank you all so much for your patience. Hope you're having a wonderful day so far. As I see some more people are joining us, I just want to pop in once more just to say hello and welcome. The session will begin on time in just a couple of minutes now at 11:20 a.m. Eastern Time.
Twenty seconds, I love you.
Hello, everyone, and welcome to the session. It is my pleasure to introduce our two speakers, Daniel Ives, the Managing Director and Global Head of Technology Research with Wedbush Securities, and Peter Tuchman, aka the Einstein of Wall Street, Moderator-in-Chief at the Wall Street Global Trading Academy. Dan and Peter are looking forward to sharing their expertise with you today. So to our live viewers, please share any questions you may have in the chat box. We will get to Q&A at the end of the session. And with that said, Dan and Peter, I will hand the mic on over to you. I'll be here if you need me, but the floor is all yours.
I appreciate it. Thank you so much. Hi, everybody. My name is Peter Tuchman. I am known as the Einstein of Wall Street. More likely that I look like him than I'm that smart. But I've been trading here on the floor of the stock exchange. You are actually on the balcony of the New York Stock Exchange, right? Built in 1903, the greatest financial institution in the world. And this is where it happens, right here. This is where the IPOs happen. This is where the market has been since 1903. We've seen, the crash of 29. We've seen whatever happened during World War II, which was fairly temperamental, I would say. I've been here since the crash of 87, and I don't use the word crash lightly at all, but the crash of 87, obviously the bubble of 2000, the great financial crisis of 2008 and 9, and COVID. And I'm saying all this to say that recently, and as I said, I don't use the word crash lightly, but I would call, we are here in 2025, an extraordinary year. One of the great things about this market is whether it's summer, winter, spring, or fall, it never disappoints. The volatility, the market, the excitement for me. And I know for Dan as well, it's like doing what we do is like being in the Super Bowl every day. It's the most exciting job on earth. And that's something that I always speak to everybody about. Go find something you love to do, get really good at it, and then follow that journey. So 2025 is, once again, 2024 was out of 218 trading days, we had 58 record closes. 25% of the trading days in 2024, we closed across the board against all financial instruments at record highs. That's extraordinary. 2025 was once again, we've already had 12 record highs. And as we speak here today on, I don't know, I can't believe it's already August, but this is actually about the year anniversary since what was the crash of the Japanese stock market and one of the biggest sell-offs that we've seen in a while on August 5th of last year. So we've had already 12 record closes, and we are now today trading at record highs on the S&P 500. We are not 45,000, I think was the high on the Dow. Obviously, the NASDAQ probably at record highs, if not close to it. And so as well as the Russell. So that's extraordinary. These are extraordinary times. And so, Dan and I, we have a podcast called Einstein and Ives. If anybody wants to check that out, talking about tech, talking finance, just talking. He and I, Dan, the best dressed man on Wall Street, and I'm the most notable face on Wall Street. And together we have a wonderful banter. And I'm super honored and excited to be here on The Money Show to begin with and to be with my friend, Dan Ives. So this year has been extraordinary. We know that on February 19th, one of the things that happens before we have pullbacks, consolidations, or crashes, I'm calling what happened from February 19th until April 19th a bit of a mini crash. It was sort of a self-inflicted economic Armageddon, to actually quote Mr. Ives, who I quote very often because he's the smartest guy in the room. But, it's been an amazing year. And, we've seen the markets look, obviously coming in with a new administration. We already had the Federal Reserve at the end of 2024 already cut guidance for the interest rate cuts in 2025 from 4 to 2. So we already knew, that the economy and the markets coming into 2025 were strong, right? 2023 and 24 were up about 25% respectively each year. So the markets were strong. Any hedge fund institution was coming into this year, having done quite well, in the marketplace. However, with a new administration, whether you're a Trumper or not, we knew that Mr. Trump was a wild card. We knew that tariffs were going to be on the agenda. And that was something that, going back to Trump 1.0, had definitely been problematic. It's going back to Davos in Trump 1.0, when Mr. Trump mentioned tariffs and China. That first day, the market actually sold off 1,400 points at 11 in the morning. And we had actually gone, by definition, from a bear market to a bull market, because that day ended up closing up 1,400 points. It was an intraday move of 2,800 points on the Dow and over 1,000 points on the S&P. So we already knew that the volatility was going to be here with the new administration. We obviously saw that a lot of people who had been very equity heavy and cash light coming into this year had sort of pivoted, knowing that Mr. Trump was a wild card. And there were things on the agenda that may be problematic. And having had a lot of good years, they did not want to give that back. And so what you ended up happening was, once Mr. Trump on February 19th, we were trading at record highs once again. That is the only component that is similar about all the crashes that we've had over all these years, is that before they happened, things were wonderful. Before, it was not wonderful anymore. And on February 19th, we were at record highs across the board. And then we started talking about tariffs. That first day when Mr. Trump said, I'm imposing a 25% tariff on Canada and Mexico, the market sold off the S&P 70 handles points in a very short period of time. But by the day's end, we had recouped at least 30% of that. And that started sort of the, one of the things markets can handle. Look, we've lived through everything. I've been here, some people say, for 137 years. I've lived through it all. We've seen it all. And markets have shown us, at least post-COVID, that they can do anything. There's nothing too high, nothing too low. We've seen every bit of volatility that a market can have, and we've seen it all happen. But what ended up happening was that markets can't handle uncertainty and surprises. And, the way Mr. Trump disseminates, and this isn't a political statement, this is just an analysis of the new administration and its relationship to the stock market. But, the way Mr. Trump disseminates information historically in the old days, news that impacted the market, whether it was from a Fed chairman or whether it was earnings reports, happened before the market opened or after the market closed, or at a designated news conference where everybody had the level playing field. Mr. Trump doesn't follow that guideline. And so what we end up having is a tweet pops out. We're like one tweet away from crazy town. And what ended up happening was we had about 11 weeks of a market that descended as large as a 20.8% sell-off from February 19th until April 19th, when the whole thing reversed. Mr. Trump called for people to buy the market. It was a technical reversal, and basically a lot of that negativity came off the board, and the tariffs started to get some groundwork. We started to, and I was on with CNN with Mr. Ives night after night from February 19th, probably for about 4 months, talking about what was happening as the market descended into that darkness. And what we kept saying was the silver lining is going to be, if a market can sell off 20% in 11 weeks, it can surely bounce back in as much time as that. We were even surprised by the fact that in 4 weeks, it was able to get back to even, which is the fastest it's got back to even in a long time, and then hit record highs, right? We were able to blow through any losses that we had from Liberation Day or Independence Day, and I forgot what it was called. And we have now, over the last number of months, have continued to trade at record highs. And, you know, a big part of it, and I know Mr. Ives is going to address it, is the AI revolution, right? And he will describe, as he wonderfully does, that we are in the second inning of a 9-inning game that's probably going to go into over innings as we descend on this incredible industrial AI revolution with trillions of dollars of capex, and some of the leading stocks that Mr. Ives covers and is an amazing analyst of. And that's been one of the biggest participants, the Mag 7, that's taken us to these levels. But there are lots of reasons, and I'll close out with this for the time being, that there are a number of reasons why we are trading at record highs, even with all the uncertainty around tariffs, because that is the big, you know, the gorilla in the room there that we still don't know. If we had Mr. Besson and Mr. Lutnick had talked about deal, done a number of months ago, we are now starting to have deals. While we were focused on what was happening in the Middle East, a lot of backroom diplomacy was happening. We do have an EU deal. We have a Japan deal. We have, you know, we're starting to get some traction about a deal with China. We've gotten, the doors are open for Mr. Jensen and AI and NVIDIA in the Chinese space. So things are changing. Things are good. Earnings were good last quarter, but they were sort of tainted by the fact that a lot of the companies were not able to give guidance, and that was problematic. We had not seen that since COVID. So we're in a good place. Look, we're not here to tell you whether, look, it's going to go up or down. The answer is yes. But you know what? I'll pitch it to my friend, Mr. Ives. He'll give you a breakdown on how he sees this market from here going forward.
No, Peter, I thought that was an awesome backdrop in terms of the market. No one better than you in terms of understanding the market and the dynamics. And look, I think we've used some times this year with the tariffs, as me and you have talked about, but we've stepped back. Like, we stepped back from the cliff, and now you're starting to get a 15 to 20% blended tariff, give or take, and probably negotiate lower. And ultimately, we're in the biggest tech boom in the last 40, 50 years, the AI revolution. And it's my view, I mean, you have talked about this for years. It started off as just NVIDIA. Then it went to Microsoft. But now our whole view is it's the second, third, fourth derivatives playing out. It's the trillions of dollars of spend, not just from Mag 7, but as this kind of, what I believe sort of, you know, for every dollar spent on an NVIDIA chip, there's an $8, $10 multiplier across tech. So that's why we believe we're in a tech bull market, not just the rest of this year, next few years. And I think when you focus just on valuation, you've missed every transformational growth stock the last 20 years. And, you know, I think Palantir being a good example, right? Like, they hated at 15, despised at 40, yelling from the mountaintops at 100, 150 screaming from the airplane, and at 200 they'll do the same. And I think Palantir is $1 trillion market cap next 2 or 3 years. And I just say, you know, a lot of times people be like, well, is this a bubble, .com? I cover tech stocks in the bubble. And Peter, me and you have talked about this so often, like, this is real use cases, real spending. We're talking about, it's going to be changing not just the way companies, but consumers. Like, it's my view, like, autonomous and robotics are the holy grail. Like, when we think about physical AI, and there's one chip in the world fueling that, and that's led by Godfather of AI, Jensen, NVIDIA. So it's my view, like, when you look at this tech earnings season, you come out more bullish relative to even where we were a few weeks ago, because it's validating the theme. And it's not just about Mag 7. We talk about in our IVES AI 30, it's about the second, third, fourth derivatives playing out. And I think the goal of here, Peter and I do this so often in terms of, on our podcast or publicly or talking to investors. It's a unique perspective because I see it more from tech analysts, the spending, what we see around the world. Peter sees it up close every day, what the trading looks like. And I'd say, Peter, I'd pose a question to you, like, what's your view of how investors are positioned heading into, let's say, post Labor Day, whatever, into August, post Labor Day? Like, does it feel like there's going to be like a risk on? There's a lot of money on the side. Like, what's your sense in terms of the types of activity you're seeing?
You know what? I really appreciate the question because it gives me the opportunity to really pivot to the retail investor space. Right? We know that what happened during COVID was, prior to COVID, you needed to be an accredited investor to really be a retail trader in this market or investor. And what we saw with the advent of Robinhood and Webull and these free trading apps that came along was 40 to 50 million people came into the market. Everyone was sheltered in place during COVID. They had a couple of shekels in the bank. Eyes were on the stock market. It was this new broad-based revolution as well of the retail space, of all these people coming in. And what was extraordinary about it was the one thing missing from all these new free accessibility, right? So what did these new free trading apps offer? It was accessibility to the market that people were never invited to this party before. And so if you have these 40 or 50 million new people invited to the party, right, that is a wonderful thing, accessibility. But accessibility without education is a problematic situation. What you end up having is people who are trading on FOMO, hype, and hope, which are not sustainable investment or trading strategies. And so I just to drop a dime on one of the things that I've really focused on, and one of my big missions is to really educate, inspire, and motivate the new retail trader. And so I have a partner. His name is David Green. He was a market maker here on the floor in 1985. We started on Wall Street together. He retired at 38 years old and has gone on to be a teacher of technical analysis. We started a company called Wall Street Global Trading Academy to teach the new retail trader who's now been invited to the party how you trade this market, how you invest in this market. Because post-COVID, investing in this market is not the same. The terminology, the word, the verbiage that we use, the depression, recession, there's so much catastrophism around the way the media does. It's there to scare people as opposed to embrace the new investor. You and I are trying to embrace the next generation of investor in this market. Who are those 40 and 50 million strong retail investors who came in during COVID? And so what you and I have talked about and what we've seen over the last number of months is that retail investor got fairly hurt badly. We know that 80% of people who try and day trade this market blow up their account and they move on and they never come back. And that happened once again with the meme stocks and all that transpired post-COVID. But what we've seen is a resurgence of the retail trader that's come back into the market with this incredible, irrational, somewhat enthusiasm around the stock market and investing. 50 million is a low end. Go ahead.
Yeah, I was going to say, and really retail, when you think about the sell-off in April and May, they held firm. Institutional really sold a lot of those names. Now institutional is almost playing catch up, right?
Well, so that's one of the reasons we are. So to give you a breakdown on why we're trading where we are, what ended up happening was I love to analyze. I'm not a financial advisor as you are. And what I am is sort of a forensic broker to explain why markets they do. And so it's important to know who's doing what, right? Where is the retail investor? Where is the institutional investor? Where are the hedge funds going? And who's involved in the market? That way you're looking in the nuance of the stock market to see. What we saw over the last 3 months was that the retail investor has matured so much, probably due to getting smacked around a bit by the last couple of years in the market, right? But they've come back. They've come back strong, and they were the ones buying on the dip during the sell-off in April and not the ones selling it. It was institutions and funds that were selling. And that shows a level of maturity. This is the future of the landscape of the investment community. And so the big institutions are playing catch up. They were equity strong and cash light, and then they pivoted out of that, and they sort of came into the new administration wanting to protect the profits of 23 and 24, waiting to find an opportunity to buy into this market. They looked really good when the sell-off happened in February. Then they got caught off guard by the big rally back in April. And now they're sitting here playing catch up. I see the market. I analyze markets daily. And when you see a market open down and trend the rest of the day up, that is buyers with commitment. That's buyers of intent.
Can you just hit on that? Like, could you explain that to me? Can you explain that dynamic? Just like dig into that piece.
Absolutely. So look, I'm kind of boots on the ground. By running the academy, we have thousands of traders all over the world, right? And we are now also partnering up with a company called Apex Trader Funding, a futures platform. All the accessibility, all the barriers to the market are down. Virtually anybody with $100 and an iPhone is able to trade the market. If you add an educational component to the accessibility and funding, you have a match made in heaven. And these people they're hungry to get involved. Just imagine, it's like Studio 54, right? I was the doorman at Studio 54 in 1980. That concept of not letting someone into a party that everybody wanted to be part of created that fury that people would line up around the block for days to get into the club. This is a club that everybody wants to be part of, right? You talk about it. It's a party that started at 4 p.m. and it's going until 8 a.m. the next day. Everybody wants a piece of it. We're seeing the IPO market super robust. People looking for alternative investments.
Well, I think you're right. I think that you hit on that point. And also it speaks to like disruptive tech, AI revolution. There's going to be so many companies private today that will be public over the coming years. And it's my view, like the growth is there to fuel it across software, chips, consumer, autonomous.
Well, look at what just happened this week. There's a company, Figma, right?
Of course.
Right, a website. It's a cloud. It's got so much. It's a sector that is incredibly enthusiastic at the moment. They were originally priced at, and it went public last week. Okay, they originally priced at 25 to 27 for their IPO initial public offering. It got reposted once they went on the late roadshow. There was so much interest. It was oversubscribed. They repriced it 33 to 35. Okay, they came down to the floor last week. It ended up opening at 85. It ran to 146 in one day. Now it's pulled back a little bit, which is normal, right? But we built the building here on the floor. What NYSE does better than anybody, surely its competitors on the NASDAQ, is the price discovery process of an IPO here, right? The way the building is built, when you go public, if it's done correctly, it's going to purport the way the stock trades forever. We saw so much. Think about it. Who was buying that up in the secondary market, which we are, right? Very few people got in on the allocation, right? I know that you deal with some of the people who did get the allocation, but the rest of the world was not able to participate. When you see something priced at 33, open at 85, that means that they are hungry. Those are retail investors. You can tell by their personality, the way they buy it. And then they bought it up to 146, right? And so that's what I call, and that enthusiasm, that landscape, really, for me, it's a.
And it speaks to the appetite, right? In terms of like the risk on that we're seeing. I mean, that's me and you talk about it all the time. Like tariffs, we're gonna have headline. Just like, we have today in terms of like India, this, Trump, we're about semi-tariffs. But my view is just, it's not going to dramatically change the growth trajectory. And also I think like Trump administration is now starting to recognize more and more, you can't just do it in the US. That's unrealistic. And I think they're not going to do things to significantly impair US tech in this revolution.
Saw that transition from the original Mr. Trump's sort of canceling the ability for NVIDIA to
Yeah,
chips to China.
exactly.
I think the administration has matured a lot. You know, they do have a very close relationship to markets and to investors. And while it started out as a headbutting situation, now everybody is playing nice in the playground, right? And that's a good thing. At the end of the day, everybody has their own negotiating tactics. But at the end of the day, the goal is to build a great market, to build a great economy, to bring in more investors. We want more people in this party. This is a revolution. You talk about it a lot, Dan, right? We are not going to be, maybe I'm aging myself, but we're not going to be watching the Flintstones. We're going to be watching the Jetsons.
Jetsons, yeah.
And you talk about it, that autonomous cars and robotics and all that, that's not in year 20.
No, it's
around.
It's around. That's, if we leave you with anything, like Peter does such an awesome job talking about the background, everything from an investor perspective and flows. I could just tell you from covering tech 25 years, like it's a fourth industrial revolution that we're entering. And it's not just Mag 7. It's spreading across the rest of tech. And I do believe investors are still underestimating what that growth trajectory looks like.
You know what, Dan, it's so important because if you notice, look, AI was something that I didn't know anything about when I met you. And I've grown and learned so much. For me, I thought outsources young people because I'm in touch with a lot of younger people in high schools who were coming to me and going like, is this AI thing going to like make it hard for me to get a job and all this kind of stuff? And you explained to me that our lives are going to be made way better by AI. And what you're seeing, what you've shown me is, think about it. In this last earnings season, okay, you hear nothing in every one of the conference calls, and everybody here who's watching this should know it's really important. If you really want to get excited about the market, is get on one of these calls of stocks that you're excited about and listen to the earnings conference call, because it really where you hear what's going on in the nooks and crannies of it all. They're all talking about it, whether it's Microsoft, Google, Apple, about how much money they're putting aside for CapEx in AI. Not just NVIDIA, not just Mag 7, but it's spreading out everywhere. And that is huge. That's the third derivative that you always talk about.
And also, no technology has ever been a job eliminator, net job limit in the last 100 years. So it's my view, like when you think about it, it's about innovation, software development, engineering, and especially with US being ahead of China in tech for the first time in 30 years.
That was your fear when we were in the midst of that February.
Well, of course, yeah.
Was that for the first time, it's a race. There is a race. Let's be clear. We don't need to, pad the situation here. It is a race between China and the U.S. as far as where we get in tech, right? And you said for the first time we are winning that race, and then that got dislocated by that self-inflicted economic Armageddon that we saw during February, April, March, and April. But we've now been able to take over that. Look. One thing that Dan says to me all the time is that we are going to have bumps in the road. We are going to have pebbles in our shoe. And so the trajectory, while it does look really rosy, you're going to see, if anybody tracks historically, and markets do trade on historic.
Of course.
That the graph goes from the lower left to the upper right. But along the way, there are going to be bumps in the road. February, April, March was one of them.
But that creates opportunity.
Correct. And that's, if we leave you guys with anything, this is opportunity. We talked about it in 2024. There were 7 pullbacks in the market. We saw one in April, July, and August, and September, and November, and one more. Sell consolidations and pullbacks are nothing more than buying net. Even crashes, right? The crash of 07, 08 took 8 years to get back to even, right? The COVID crash, which happened on March 23rd, we were back to even by August. That's a 4-month. And this past one was an 11-week sell-off. We were back to even by 4 weeks later. So the market has just grown. It's robust. The market is maturing. The investors and traders are maturing. And so this is a revolution in next generation of traders. And I'm sure many of them are on this podcast here this conference.
No, I just want to say exactly. I think you nail it. I think that's exactly where we are. I am. Look, I know we're getting toward the end here, but I just want to see if there's any questions, and then we could end it in terms of, because I know we have a tight timeline.
Yeah, beautiful. We do have a question in the chat for both of you guys. Actually, Eric had asked, what are your, or at least what do you think are the top stock picks outside of the Mag 7?
Yeah. I mean, to me, outside Mag 7, it's the Messi of AI, Palantir. That continues to be one of our favorite names. Aqua on the energy side, because nuclear is going to continue to fuel AI revolution. And then on cybersecurity, I mean, if you look at cybersecurity, some of these names are oversold. Names like CrowdStrike, names like Palo Alto after the CyberArk deal, Zscaler. Those are some names outside Mag 7, software cybersecurity, that I would be focused on, especially as second, third derivatives play out.
I'm not allowed to answer that question, so I'm going to pass.
Yeah, and I would just say, you could reach out to us, me, on X, Dobbs Tech, LinkedIn, obviously Tuckman on multiple social media platforms, right, Peter? They could reach out to you.
I look, as I said for a moment there, I have an academy with my partner, David Green. We teach people how to trade this market. We have a partnership with Apex Trader, which gives accessibility and funding to new young retail traders. So there's minimal risk to get involved in the market. We're inviting Dan from an educational point of view and an analytical point of view, and me from an educational and accessibility point. We're inviting you all to interact with us. Reach out to me on Instagram. I answer all my DMs. It's not some robot.
Yep.
Einstein of Wall Street.
It's not an AI, Tuckman.
Dan Ives and we have a podcast called Einstein and Ives on YouTube, which is just starting to explode. We are accessible to you all. Anybody who reaches out who wants to know how to get into the market and trade, who wants to know about tech, we're at your service.
That's the goal, to navigate this market and create the opportunities, and also when the catastrophism come, to use that as opportunity to own the winners.
You know what? The last thing I will say is I met with some people yesterday, a lady named Kathy Lean and Boris Schlossberg, who have been in the FX space and in the trading space for a long time, and they said that the experience that we have. You were trading tech 25 years ago. I've been down here for 40 years now. Experience, there's nothing that matches experience. For us to be able to share that we've seen this move before, right? And we can tell you with some kind of certainty that when things are even bad, and you and I were in the middle of it, and we were not clear whether we were going to walk out of it as quickly as caught off guard on this one. We're always students of the market. We will forever be students.
Yeah.
In this movie before, we may have a little bit of information and experience that can help a young trader trying to navigate this space. It is.
Yeah, exactly. But thanks for everyone joining, and thanks to Manisha, and we'll see everyone hopefully live. Me and Peter.
Look forward.
But thank you.
A pleasure and an honor.
Oh, well, thank you both. It has been a pleasure having you both on here today. To those watching us live, I did go ahead and put their YouTube channel into the chat for you if anybody wants to go and check them out. You'll be able to see any of their other content that they post, as they mentioned. It's been wonderful having you both join us here today. Thank you so much.
Thank you so much. Thank you.
Fantastic. To those in our live audience, be sure to stay tuned, as we do have a lot more in store for you in this Money Show Virtual Expo. I hope